Good evening, everyone. This is Henry Gamble with SimplerOptions.com, and today we're taking a look at the free video discussing the transports. The transports have seen a lot of commentary here lately. John really likes following them as a leading indicator for the markets, and I like playing things like that contrary to some degree, but I also like being able to explain it across different platforms. That is the goal of today's video. So when we're first looking at this in TradeStation, the first thing that you want to make note of is that we are using the symbol $TRAN. It has a watermark behind it that will tell you what this exactly is, or you can also look to this upper header part of your charts to also tell you what you're looking at. It's important to note in this case that we're looking at the Dow Jones Transportation Index because there are several ways to look at the transports. So we know we're using $TRAN. Okay, so then we come back over to Thinkorswim. We throw this in using the exact same symbol, and it can be a little deceptive because instead of just giving you an error or something like that, it'll just sit here and tell you that it continues to pull data. Okay, well, whenever I'm trying to get symbols to correlate with each other, one of the first things that I'll do is remove the cash symbol just to see what it brings up. Well, in this particular case, TRAN brings up the NASDAQ transportation, and that is an important difference to make. They are different indexes. So that's obviously not the symbol that we want to use. We omit that. We notice that the header that doesn't match, essentially what we want to use is DJT. There is a cash sign in front of this, but once you have this signal pulled up, we're now looking at the exact same data that we were looking at in TradeStation. Okay, excellent. Now we have the chart. A couple of things that I like to do, and this actually looks a little bit better without using studies, is anytime I look at a chart, I try to think, okay, the left-hand side of the chart is easy to read. Anyone can do that. I'm trying to figure out the right-hand side of the chart. With that in mind, I step back to the weekly and I say, is this in a bullish or a bearish trend? It is making patterns of higher highs and higher lows. That tells me it is currently still in a bullish trend. I can also see that we've had a very healthy advance from this swing low to this swing high. In the scope of this swing, this is where I want to start running my retracement. It is retracing the bullish swing, and this is one of the first areas that you'll begin to find support. So I grab my fib retracement tool, run that from swing low to swing high, and then I see, remove the levels that you've gone through obviously, but if this is 100% of the move, which it obviously is, we have made almost a perfect 50% retracement of this. This zone from 50 down into 618 is where the rubber meets the road. It's where bulls really have to make a stand if they're going to maintain this bullish trend. Okay, that's the first swing that I like to run. Then I will also flip this and look for extensions of previous swing lows to swing highs. As we start to run these levels, and here again, you remove the ones you've gone through, but you just start to notice how we are actually closer to a retracement and an extension of previous swings than we are to an area where I would set up fresh short opportunities. So at the very least, I just like to provide a counter trend way of thinking, something so that if people are looking at this thinking, gosh, that looks so bearish, I'm going to jump in here and get short. Just think about those extensions, retracements that are offering support, and then also how you would feel if we had a very simple retracement. Now, I don't know if this is going to be the low. I know that it is at least an area where we could bounce from. If we get a bounce in the transports, three things to look at. The first of which, and the most simple, is the 21 EMA. A retracement back to the 21 EMA should never scare you out of a position. You should look at this as a reversion to the mean, and still very much within what would be in that case a bearish trend. Then, swing high to swing low, and combining the symmetry of the rally that preceded the decline with it. So essentially all I'm trying to point out is that when you see these types of levels and you see, wow, that's a really good confluence between symmetry and the 618, that's not too far off of the 21 EMA, just think about that opposing side of the trade before you start getting super aggressive short near the lows. So we're going to continue to update this chart as it unfolds. I just thought it might give you TOS users another way to compare analysis that John is running each night, give you a kind of counter trend opinion on the support on this, and there again we'll update this as it unfolds. So you guys have a good night. We'll see you at the next free video.